Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day. Bitcoin has seen a brutal correction, dropping from 96,000 all the way back under 92k in just a single day. We're going to be taking a look at what this means on the macro. Has this move impacted the macro expectations for Bitcoin, our macro targets, the short-term price action after the breakdown of the 2+ week consolidation, and even diving into the altcoin market and total market cap. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to a multitude of group chats, being our general chat, our trading chart and education chat, our daily video chat, and of course our community trade setup chat. If you were interested in joining that, contact me by the pinned comment in the free channel. Click my name, the first link to see a 50+ month trading track record, and the second link to find a 10-minute video. Let's go ahead and jump into the content. As we can see, Bitcoin has had an absolutely brutal 24 hours with a correction underneath the range low at 94k. If we take a measured move of this breakdown, we can see the breakdown has almost fulfilled the measured move target, which we described to be that 90,900 level. We're coming very close to that. So congratulations if you are able to capitalize on this move. Moving to the daily chart, we can see the daily candle has closed at the lowest price since we entered this consolidation all the way back in the beginning to middle of November. The closing price of this daily candle was $91,515. And if we take a look at that weekly chart, if we are to close the weekly price, the weekly candle underneath at, or should I say at this price region, we would see the weekly low being taken out. Now in today's video, we are going to be discussing the macro implications of this move, specifically going over a chart on the weekly, which more or less predicted this pullback and can shine some light on where Bitcoin may go next. Let's move over to our market data. 24-hour volume is up a considerable amount at 133% at 254 billion. Liquidations surging an enormous 624%, 820 million. Of the 889 million, 824 million of those liquidations came from long positions. So around 90% of the total 24-hour liquidations have come from long positions. Looking at the DXY has momentarily bounced from that weekly prior support. Again, if we do see the DXY start to begin to climb back upwards, this is going to be more bearish for the risk asset market. We are wanting to see a correction here back to the midline to add some relief to risk assets. We are keeping very close eyes on this, particularly moving into some major economic news in the next month, mainly being on the 7th, we've got NFP and unemployment. And of course, if we look at the current month, on the 28th, we have got our personal spending and income, which is a good indication of developing inflation. Moving over to the S&P 500, the S&P 500 is not looking amazing over here. We were unable to break above this downtrend on the daily for the RSI, signifying that the buyers are not yet back in control and the selling pressure is still very much there. Exhaustion continues to develop as momentum continues toward the downside. We've said it for many weeks and we'll say it again. For us to be bullish on the S&P 500, for us to consider the price will continue upwards, we need to see that RSI break out. Until that occurs, the potential for corrections back to the 50 EMA are very much a reality. Now, before we get into the rest of the content, make sure to join BitUnix, BitGet, or BingX with the links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support me making the content, and most importantly, you'll support yourself in your trading journey. So sign up for the links down below, BitGet, BitUnix, or BingX, 15% discount on trading fees, and we'll see you back in the video shortly. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and dive right back into it. Now, I took a little break because I wanted to do some trading. I was able to get a couple trades in here. We got a $6,000 profit on Ethereum, as you can see here, a nice little short. $10,000 profit again on Ethereum, a nice little short over here, and a $3,000. So we had a nice $20,000 morning, and that's pretty good considering I even announced my retirement from aggressive scalp trading literally yesterday. So we had a pretty good start here for the day, but we're going to end it there and jump into the rest of today's video. Taking a look at this correction. Now, we mentioned a few weeks ago the significance of a very particular level on the weekly RSI. Now, a lot of people looked at this level and said, well, that can't mean much, or that doesn't mean much, but history has proven otherwise. If we take a look at the 62.09 on the RSI historically, there has been around about 15 instances over the past 10 years where we have broken below this level on the RSI. And historically, around 9 out of the 15 times we've dropped below this level on the RSI, we have seen a weekly correction from the point at which the RSI closes below 62.09 and beyond of 10% or greater. 6 out of the 15 times that correction has been larger than 50%. So historically, not every time have we seen a correction when we break below 62.09, but more often than not, we have seen. And generally, when we have something that has a statistical probability of occurring, we have to take that with some sort of significance. Regardless of whether or not we act on that information, we need to be aware of the potential consequences that could arise as a result of that signal being triggered. So to keep it simple, I don't want to dive too much into this chart today because it is more speculative. If we do take a look at that RSI historically, when we have broken down, we saw a 24% correction, a 10% correction, a 78% correction, a 55% correction, a 62% correction, a 72% correction, and if we even go back to 2014, we had a 72% correction, a 26%, and a 12%. Now, out of the last 15 times, there were 3 instances where the RSI breakdown resulted in a move which was either a positive move, meaning it went up, or the correction was less than 10%. So what does this mean for Bitcoin, and why is this significant? Why am I even talking about this? Well, we look at when that weekly RSI actually broke down. We can see it broke down at a price point of around 96.2 thousand. We are currently sitting at the price point of around, if we look at the current market price, it's around 91.5. So we've seen a 4.73% correction for Bitcoin as per the weekly RSI. That would signify at least halfway through what could be a 10% or greater correction. If we were to drag this out to 10%, now 10% again, 9 out of 15 times we have seen that, it goes to 86,000. So what does this really tell us? It tells us that the correction for Bitcoin may not be completely finished from a technical momentum perspective on that weekly chart, according to the 62.09. So let's go ahead and take a look now at the price action. Let's start on the short term. The short-term price action, we saw a significant drop in Bitcoin's price. There is no doubt about it. We saw a very, very unfortunate failure to sustain above that weekly downtrend, and we talked about how if we were unable to sustain above the weekly downtrend, we would likely correct and continue along the trajectory of this trend line. We showed you that as an example many times over the past few days, and unfortunately we have seen that play out. We have seen Bitcoin unable to sustain above that 95k low. We saw the breakdown occur. We take the measured move, and we have seen that measured move play out pretty much almost perfectly. In fact, we came very, very close to that measured move target. In fact, it was almost to the dollar. If we zoom in over here and apply that perfectly, we have that locked in over there. We have that locked in over here. You can see how perfectly, in fact, almost perfectly, 2 cents, guys, 2 cents off the target of the measured move breakdown from that range. If that is not accuracy, I really don't know what it is. 2 cents off the target there for Bitcoin from the measured move. So we can say with confidence here that the measured move is complete. Now, that doesn't mean Bitcoin can't go lower, but it does mean we are more likely to potentially find some degree of short-term support here, which could result in a short-term reversal, as we have seen numerous times in which we enter this $92,000 region. You can see over here in the $92,000 region how many wicks we have seen into this lower region, which resulted in reversals. Now, for us to be confident that this reversal will sustain into a higher time frame continuation, the same validation points we need to see, which we were prior looking for, need to occur, meaning we will need to see a breakout of this weekly downtrend. This is something that needs to occur. This isn't an option. We have to see that trend flip. When that trend flips, the probabilities will then shift in favor of continuations upwards. And number two, we absolutely need to see this daily downtrend, the RSI breakout. When the daily downtrend, the RSI breaks, it would signify that the selling pressure within this consolidation has now dissipated to the point at which the buyers are back in control, and if the buyers are in control, the probabilities for continuations upward significantly increase. So we need to see those two things. First and foremost, the daily RSI, and on the short term, the weekly downtrend. Now, if we move to a 12-hour chart, we can also see, and I've been talking for the last few days about how we were going to see quite an aggressive move. And a lot of people say, Whale, you use that term a lot, aggressive move, significant move, huge move. And the reality is, not every large move in terms of percentage is significant. Sometimes small moves can be very significant for the Bitcoin price action, because it's more to do with the levels in which are broken that define whether or not a move is significant, rather than the percentage change of the asset. Now, in this instance, we saw both a significant move breaking down from a critical level and a large move at the same time. Now, we talked about over the last few days and weeks that we had compression here on the moving averages 50 and 200. Now, we talked about how when we would break on these moving averages, we would likely see a violent move in that direction, and we have now seen that. So let's zoom out a little bit here and talk about the consequences of this move. On the macro chart, the consequences of this move are little to none at the moment. The short term obviously has now played out toward the downside. The macro consequences are little to none. In fact, we are now moving into a territory of support. The only next trigger point which would define and result in a stronger move downward is going to be, number one, a weekly candle close underneath the weekly range low, which we talked about at the start of the video, at 93.7. And number two, a close on the daily, which is unable to reclaim the daily low, meaning we break below, we come up, we reject, and that rejection is confirmation of continuations. If we see that occur, we enter this low historical resistance range. And this is where that weekly RSI really comes into play, because if we do drop below this region, the potential for a correction back to 72,000 or 70,000 significantly increases, guys. And again, this is a large move percentage-wise for Bitcoin. as we can see, 20 to 22%, which could occur if we lose that range low. So we definitely do not want to see that range low lost as we enter that low historical resistance range. A low historical resistance range is simply a range of price action where the horizontal, horizontal volume requirements for the price action to move between the specific horizontal levels are decreased, are lower than what we would see in a range of consolidation. Again, the VRPV, the indicator on the right hand side, visibly shows that concept. So we would expect volatility to surge upon the breakdown of this level, which could result in a strong downtrend. Now let's talk about the bullish case scenario. Support is support until it is not. We have seen mass liquidations and we have seen a huge correction for Bitcoin. We'll come to the short term in a second, but the probabilities are now in favor of a potential short-term bounce. Now, we are watching for that. We'll talk about it in a second, but we've already talked about what needs to happen for the higher time frame to turn bullish. And just as we have that daily range low, we do have a daily range high. And this is a neutral consolidation. So if we do break the range high, we will likely see continuations. To go ahead and visibly show you potential scenarios, scenario number one would be a correction into the moving average, a 200 moving average, followed by a mass liquidation only to see a reversal and then a continuation through. This would be best case scenario. Scenario number two would be worst case scenario. We see a correction, a rejection, and a correction. And scenario number three is we do see continued sideways chop for an extended period of time before we see a definitive directional move at a later date. So those are the three scenarios we were looking for. Again, going to the short-term price action, moving down to something like an hourly chart, we can see that price action has come down to retest this lower level of liquidity. Again, a pretty significant correction here for Bitcoin. We really have to dive down to a very small time frame to talk about this, even a minute chart to take a look. We can see momentum is starting to curve on upwards. This is an indication that the selling pressure is slowly starting to dissipate. Very slowly starting to dissipate. We can see the price action is beginning to creep itself closer to that 200 moving average, which is again an indication that the volatility, which has been increasing, and this is bearish volatility, right? Because we're under the 200 moving average, is starting to fade away. So we are starting to see some signs of buyers stepping in or sellers exhausting, and both of these scenarios can lead to reversals. Again, for us to see the price action continue upwards, we are watching that 1 minute 200 move average, that 92.5k level. We will be at a point of significance. Let's move over to the total market cap to wrap up today's video. Like we mentioned, guys, huge correction on both Bitcoin and altcoins. Let's start on the total market cap chart. The total market cap chart is retesting the level of support, which is the most important level of support, the 2021 high. This level cannot break. If we drop below this region, we validate deviation from the 2021 high, which will result in a strong correction for the total market cap, potentially to the 200 moving average. We can see we have got a bearish divergence at the high, and we are above, just slightly above the 2021 high, horizontal level. When we see a breakdown of a horizontal level with a bearish divergence, this is generally a reversal signal. It is a sell signal. It is an indication that the buyers were unable to sustain the price action above the prior high. This is essentially overvalued, and the price action will correct into an area of supply where buyers will then step in, create a higher low, hopefully, and push the price back upwards. So we are at risk of a steeper correction if we do drop below that level of major and very significant support. Moving over to this chart, the altcoin market chart has really copped a beating, guys. Really copped a beating over here. Let's take a look at the 4 hour. We have broken below that horizontal level of support, and this was our range over here. If we take a measured move of the range and apply to the breakdown, as Bitcoin has retested its low, the altcoin market has not. So we could potentially see a steeper correction here for altcoins, particularly if Bitcoin dominance does continue upwards, which it does look like it is doing. The altcoin market might have a little bit more blood loading and a little bit more of a downtrend. Now, we are underneath the daily 200 moving average, which will be the first time we have dropped under since November. This is again a sign of general weakness, not a sell signal in itself, but a sign of weakness, and we are coming close to retest that 50 EMA. Worst case scenario, we would see a loss of the 50 EMA. Again, a loss of the 50 EMA with a bearish divergence and a breakdown of a horizontal level would mark this as deviation and continuation lower. Until then, we are in an area of support. So there is a chance of bounces. I want to really make it clear that today has not really shaken the macro much. It is not, game over for the bulls. It is not, but the bears are fully in control, but it is looking grim and there are some massive warning signs. And if we do go much lower, it is going to be more likely a steeper correction. So we are really on that last stand for the market for buyers. They really need to start to hold these levels and really need to jump in very soon to show some strength. Otherwise, this selling pressure which has been building may spill over into a liquidation cascade on the higher time frame. Thanks for tuning in. Have a fantastic day. Catch you in the next one. Bye.